All right, everybody. Well, welcome in today. My name is Devin Egan. I'm the president here at Tax Hive, and I just want to start out by saying thank you so much to Shane Hollingsworth and his group, all of his, network and audience and partners and clients. We're just so grateful to be with you and to deliver here at the end of 2024 what we feel like is super critical information. Like I said, I'm the president here at Tax Hive, and I'm going to share some things with you that I think will be a little bit surprising to you. I know nobody is really on the edge of their seat about taxes. This is a topic that is just an unfortunate reality, but it's very, very important. And I would say that as a business owner, it's probably the fastest way for you to give yourself a raise or to increase your profitability, increase your net margin. And what we talk about here today, I feel like is going to be critical for you. And whether you see this, whether you're with us live right now or you see this on a YouTube broadcast, or maybe now it's 2025 and you're like, my goodness, what am I going to do this year to make sure that I keep more of my precious money? That's what we're going to talk about here today. And I'm going to share my screen here with you so that you can kind of follow along. And then I also just want to make sure that we're on the same page with regard to everything that we're going to discuss, and that, hey, Devin Egan is not an accountant. I'm not your CPA. I'm not going to give you personal advice for your specific scenario, but I am going to cover things broadly and generally enough that I think that you'll find this extremely compelling. And, if you want to take action on something, Tax Hive is definitely the team and the group to do it with. And maybe Shane or Nate, I know you're kind of in the background here. Can you guys see my slides okay? Or is it also doing sometimes it does a weird presenter view? I just want to make sure, is it showing me and my bald brother, Kevin, and the little QR code?
Looking good, man. Looking good.
All right, fantastic. So as you can see here, Kevin O'Leary, I call him my bald brother. I've been with Kevin and worked in and around him on a number of different projects for the better part of a decade. This was earlier this year down at his place in Miami. We were doing some filming. Kevin O'Leary, yes, Mr. Wonderful from Shark Tank, is an equity partner in Tax Hive. And, so he's not just a spokesperson, he's an actual owner. And we love having him as part of our organization. He is part of the blood of our economy here in the US, of helping small business owners thrive and also keep more of their money. And as I go through this training, I want to just be crystal clear. Nobody's going to ask you for a credit card. I'm not here to invite you to get your Amex or a Visa out of your wallet or your purse. You can keep that to yourself. What I am going to invite you to do is to be a person of action. And that if, a couple of times as I'm talking, you get a clue, like something in your head says, oh yeah, I should that's worth a conversation. That right there is worth talking to somebody. Well, then all throughout, I'm just going to have a little QR code in the bottom right-hand corner, or you can go to taxhive.com/Shane and you can book a call. It's a discovery call. It's a strategy session. It's 100% free. There's no obligation. There's no expectation. It's 100% on the house. If you want to discover a little bit more about your tax scenario and see if we're the right fit for what you need to be doing, then great. Scan the QR code, go to taxhive.com/Shane, and you can take care of that anytime while I'm talking. Now, as we get into this, I'll just ask, kindly, don't raise your hand or stay silent if you don't pay any taxes. And, that should be everyone that's staying silent and not raising your hand, which is all of us are taxpayers, right? So I think I'm talking to the right audience here. And the reason I like to ask that question is just that everyone every day experiences some version of a tax. And you may not like it, you may not even realize it or pay much attention to it, but you and I pay taxes every single day. In fact, we pay far too much, which brings me to my first question. How much do you think you pay? Like, what do you pay in taxes? Think of the number, or rather think of the percentage. What is it? How much is it? And how much is it costing you when you pay that much in taxes? And I'll just, very briefly here, I asked some rhetorical questions. How much do you pay? Well, odds are that you're paying somewhere between 20 to 40%, depending on your income bracket. You're paying federal and state income taxes in most scenarios. There are a few states that don't, charge you income tax. But here's the other sad truth. When I ask this question, almost everyone defaults to income tax. And yet you and I don't only pay income tax. Guess what? You own property, you pay property taxes. And there's always somebody that's like, hold on, Devin, I'm in a state where there is no property tax. Okay, no problem. Well, then you pay sales tax, you pay toll roads, you pay all kinds of other taxes. Like in this country, right? We're taxed when we make it, we're taxed when we buy it, we're taxed if we sell it, we're taxed while we own it. And even in the case of healthcare, you're taxed if you don't buy it. And the only thing that you and I were talking about a minute ago was income tax. It's probably safe to say right now, as a business owner in this country, you have to make two just to keep one. And way back in the day, Benjamin Franklin or someone used to say that a penny saved was a penny earned, right? Well, not anymore. And if you and I want to change something about the landscape of our, financial future, we have to solve the tax problem. In fact, if you don't, let me illustrate for you the ongoing cost of not fixing your tax problem. Like, let's pretend that you don't scan the QR code, you don't go to taxhive.com or taxhive.com/Shane and schedule a call. You don't do any tax planning or tax strategy. Well, then this is a little bit like what your future holds in store for you. So what's on your screen right now, very simply, is $1. It gets doubled every single year. This is the power of compounding, right? This is the equivalent of you taking your money and growing it over time in your business, because that's what we as business owners do, right? We grow money. We take an investment and we take our capital and we take our intellectual property and we put it to work and we grow those dollars. Well, I know what most of you are thinking. Hey, Devin, it doesn't take me 10 years to accumulate $1,000. Okay, fair. But let's fast forward now to the next set of 10 years. When we get out in years 11 through 20 and we continue to double our money every single year, well, now congratulations, at the end of 20 years, you've got $1 million. And I know some of you may be thinking again, Devin, it doesn't take me 20 years to make $1 million in my business. Well, run the numbers however are fitting to your circumstance. If you're more successful than this, then what I'm about to show you is going to be even more catastrophic, right? We just talked about taxes and how much you pay. And we kind of agreed I'm probably all in effective tax rate on income, sales tax, property tax. When I put gas in my car, there's a gas tax. When I pay my phone bill, there's a phone tax. There's taxes left and right. You and I just agreed that probably half of our money is going to some version of a tax. And if you look at this illustration, you and I just grew money over 20 years with no what? With no tax, like in the absence of tax. And that's not reality. That's not the game you and I play every day. So what I want to do is I want to rerun the exact same scenario. And I'm not going to take 50%, which is what you and I are probably all in paying, because some of these taxes are non-negotiable. We can't do anything about it. But guess what part of the tax code is negotiable? It's your income tax, right? You and I actually are in very much control of our income tax, particularly through our businesses. And I'm not suggesting that I'm going to take you from 50 to 0, but watch what happens if you're just simply overpaying by just 15%, not 50, not 30, not 20. If you're overpaying by 15%, watch what happens to these same numbers. At the end of 10 years, instead of $1,000, you have less than 500. Half of your money gone. Where did it go? Well, think about that for a second while I show you the next 10 years. The next 10 years, instead of you having $1 million, you now have less than $250,000, like 220,000 instead of the million. Like, is anybody alarmed? And this was with a 15% tax. So where did the money go? I mean, I'm curious if you could just answer that question to yourself. Did your dog eat the money? Did it just vanish into thin air? Did the government get your money? Where did it go? Where's the other $800,000 that's gone? And most people usually assume, oh, yeah, we paid a 15% tax, so the government got it. No, actually, if you look in the bottom right-hand corner, you and I only paid $51,000 in tax. But what happened here was that the power of compounding never took place. The money never grew. This is what we call opportunity cost. And when you run your numbers and you say, oh, well, we only paid $51,000 in tax. Okay, but you never had the potential to infuse more money into your marketing, into your personnel, into your cost of goods, into your software, whatever it might be, better distributions to your partners. You never had the money in your account, and therefore you were never able to do anything with it. This right here is the cost of overpaying on taxes. And I just promise you, if you don't fix this problem, it probably will never matter how much money you make. It may never be enough. If you're anything like me, I've got 4 kids, my wife, the expenses of today's day and age, where you go to the grocery store and you can't escape Costco without a $500 or $600 bill, right? You look back at your bank account and you're like, hold on a second, where did all my money go? It felt like I made way more than this. This is the biggest problem that almost every business owner has. And the real difference here is not that you're not working with a professional. You probably have a CPA or accountant. The difference is that you don't have these 4 pillars. You are not currently maximizing your deduction stack. And when I say maximizing, we're going to talk about all 4 of these pillars, by the way, and I'm going to fly through this. We're going to spend maybe another 20 minutes together. But I've got deductions, credits, gaps, and dynasty strategies. This is how TaxHive maximizes the savings for a client. We do it across all 4 of these pillars. And as I talk to you here over the next 15, 20 minutes, you're going to have a couple of light bulbs go off that go, hold on a second. How come my CPA, my accountant, who I'm paying every single year to do my taxes, how come they've never told me about this? And I want to be really, really clear on this. I'm not here to disparage any one of them because they're probably family to you, or they're your neighbor. You know them somehow. You've worked with them for a decade or more. They're not the bad person here. Like, it's actually not their fault. They're paying, or excuse me, they are doing exactly what you paid them to do, which is tax preparation, right? Let's talk about that. Tax preparation is where someone takes your facts and your circumstances and your receipts and your numbers, and they check boxes and they input numbers into a calculator. And at the end, they say, here's what you owe. It's a little bit like a cashier, right? Only you might wonder, do they work for me or do they work for the IRS? Because the cashier that I work with at the grocery store works for Harmon's or for Smith's or Albertsons or, Safe, whatever chain you go to on your grocery list, right? The cashier tells you what you owe. They don't follow you around the grocery store and tell you, oh, no. Don't go down that aisle. Go down this aisle. No. Don't buy that product. Buy this one. There's a rebate. There's a coupon. There's a discount. There's a credit. There's a deduction. There's a gap. There's a dynasty strategy. They're not doing that. Why not? Because it's not their job. It's not what they specialize in. It's actually, in most cases, something that they're totally unfamiliar with. Most of them are not capable of doing it, or they're so scared of the tax code that they are unwilling to do it for you and to help you with it. Now, here at TaxHive, our team, our accountants, our professionals, our advisors understand the code. We're not afraid of it. We've done it thousands and thousands of times for thousands of clients. And we maximize savings across all 4 of these pillars. When you look at maximizing deductions, which I'm going to get into here in just a second, there are over 1,400 potential deductions, and you probably offhand only know of about 5 of them. Writing off the interest that you paid on your mortgage, employing your kids, your home office deduction, writing off the mileage on your vehicle, Section 179. There's a number of little things that you might be aware of. But how are you going to pay attention to your business, your family, your hobbies, and also become a tax professional? It's not realistic. So here at TaxHive, we'd love to be your partner. We can be your partner without firing your tax preparer. You can continue to work with him or her. But let me show you what it is that we do within these 4 pillars that has such a massive impact. And I'm the kind, I kind of like to ruin the story here a little bit. Let's just fast forward to the fun stuff. I'm the guy that doesn't mind the spoiler, right? Tell me the ending of the movie and I'm still going to enjoy it. And so let's just do this. Let's fast forward to the 4th pillar, which is dynasty strategies. Dynasty strategies are the home runs. These are the, at least the triples or the big hits. These are not the bunts and the singles that put you on base. These are the things that add a lot of money to your bottom line. And so I just want to fast forward to some of the fun stuff, and then we'll get into some of the blocking and tackling as well. Dynasty strategies are broad and vast, and they sometimes involve other investments. They also sometimes include other strategies and gaps that you have to include in this. But suffice it to say, you've got solo 401ks, you've got captive insurance, you've got oil and gas, you've got mineral deposits, cost segregation. I mentioned retirement accounts, solo 401ks. I'm going to show you today the accelerated donation strategy. Now, you've probably never heard of this one. And if you had, you wouldn't have the courage or the wherewithal to do it on your own. It gets a little bit complex. But at the end of the day, this is you taking dollars that you were already going to pay to the IRS. So what you see on the screen here, let's pretend for a second, you owe the IRS $100,000. And you might think to yourself, man, is there a better way? Is there any way that I could pay less? And your current CPA accountant's going to go, well, no, like this is just what you owe. And in reality, had you thought about this in advance, had you done some different things throughout the course of the year, you could have taken dollars that would have already been sent to the IRS and just reallocate them to a different strategy, a different investment. In this case, a nonprofit, right? An eligible 501c3. You might say, well, Devin, so just like my local church or a food group? No, that's not what's going to qualify here, right? These are specialized nonprofits that the IRS has to approve of. Something like the Red Cross, be a basic example at certain times. If there's, catastrophic events, there are opportunities to get these multipliers by making donations to specific charities. For sake of example here, you're spending now $50,000 in a donation, but it's not new money out of your account. Let's be really clear here. This isn't 50 grand that, had to be invested outside of what you're paying to the IRS. These are the tax dollars that were already going to go to the government. And you might tell me, hey, Devin, our government is such a good steward of my money. I wish that they, can I give them more of it, right? None of us are thinking that right now. And so we would rather take 50,000 of the 100, donate it to a 501c3 nonprofit, get a multiplier on our money. What does that mean? Well, if we take a 4 to 6 times multipliers, typically where it lands, let's use easy math. I grew up in the age of the calculator. Let's use a 5x multiplier on our 50 grand is a $250,000 deduction. Now, again, pump the brakes. This is a deduction. It's not a net savings. We didn't just save 250 grand. We got a deduction. So let me show you what this means. We donated 50. We got the deduction of 250. We have to run the deduction through our tax bracket. Let's pretend now that you're in a 32% tax bracket. That's an $80,000 savings, but hold on one more time, pump the brakes. You still made a $50,000 donation in order to get the $80,000 savings. So the net effect of that was $30,000. Now, how many of you by show of hands would be, or just emotionally, give me an affirmation here. How many of you want that 30 grand? I mean, sorry for asking the dumb questions, but how many of you'd like to keep $30,000 in your bank account that wasn't there 2 minutes ago, right? And here, just to show it one more time, we've taken dollars that were already going to go off to the IRS, and instead of sending them 100,000, we've now sent them 20,000. We donated 50,000 to a nonprofit, like high five, pat yourself on the back. You're a charitable person, and you kept $30,000 in your bank account. What are you going to do with that money? I wonder. Could you put it to work? Could you put it towards your marketing? Could you hire some, or pay your best people a little bit more to keep your top talent? Could you pay better distributions to your partners? There's probably a myriad of things that you would do. Add more product into your offerings. I don't know what you would do with it, but I know this. Those dollars matter. They matter to you and to your partners. And it is your duty to yourself and your partners to figure out this tax game and do it the right way. Now, at TaxHive, we don't just throw you a bunch of strategies like you might find on Reddit or YouTube or, Twitter or X, wherever you are, right? You might come across a thread and it says, oh, here's this strategy or that strategy. It's less about knowing the strategy. It's more about understanding the complexity of how to implement it, how to document it, doing it the legal way that you have legal precedent in your defense, and that you also are able to quantify the opportunity. I have friends that know about tax strategies from social media, but they've never quantified the opportunity. I'm a numbers guy, and I love, so like what you're looking at on the screen right now, is an example of an actual tax plan. I've redacted the person's personal information for privacy's sake, but this is a real tax plan. This is the cover sheet. It's a summary page. After the summary page, you would see all of the itemized deductions, credits, gaps, and dynasty strategies. But here for this, use case, what I want to emphasize is that in the absence of quantifying the opportunity, you'll probably never do anything. Like I could tell you about an S election, I could tell you about Rule 280A, we could talk about the accelerated donation thing that we just discussed. And if you understand a strategy, but you don't know how much money it's going to potentially save you, the odds of you doing something are very, very slim. So we love to quantify opportunities. Our tech and our intelligence will do this in your tax plan. We deliver the strategies as well as the dollar amounts that are on deck for you to capture in savings. Now, this tax plan right here, pretty basic in nature, about 6 different strategies, almost $30,000 in potential savings, significant deal. Now, as we get into this, I'm about to show you a bunch of other strategies and case studies from actual customers, but I just want to make a very clear invitation, right? If you listen to me, you're paying attention right now, you put away TikTok and Twitter and Instagram for a minute, and you found a moment of silence to pay attention to your tax scenario, the next best thing that you can do for yourself and your business is to schedule this call. It's a 100% free strategy session. There's no expectation that you're going to move forward with Tax Hive just because you have this conversation with us. And we would recommend highly take advantage of the discovery call, scan the QR code. It's going to look like a Calendly. You'll click a button that says schedule here. taxhive.com/Shane is the way to go. And when you do that, you'll be in touch with one of our advisors here that can potentially walk you through what we do and how we do it, how that might save you money. And that is my invitation today. I'll show you this again at the end. It'll be in the bottom right-hand corner on multiple slides. When you have that aha moment, scan the QR code. Let's explore some possibilities together. Now, we've asked this question right here to almost 90,000 business owners. We've said, hey, are you confident that your accountant is maximizing all of your possible deductions for your business and helping you stay compliant with the tax code? And sadly, almost 80% of them say no. I'm not surprised. It's just a little bit disappointing. Why would they say no? It's because the person you are working with right now and that all of these other business owners have been working with are checking boxes, inputting numbers. They're not thinking forward about your tax scenario. They're not strategists. They're not planners. Why wouldn't they be? Well, it's because you're not paying them to do it, number one. Number two, in most cases, they actually don't understand the code well enough to be your strategist. And then number three, they just don't want to take the time. Like if you think about the lift, the energy and the intelligence to exert that type of, forensics and analysis, it's just inconvenient to them. So keep working with your tax preparer. That's totally fine. You need a tax strategist and a tax planner so that when you meet with your tax preparer, the cashier, right, gives you better numbers because you had a bunch of coupons, rebates, credits, gaps, and dynasty strategies. Now, the simple question for everybody listening to me right now is, are you willing to do something about it? Like, are you an action taker, or are you just comfortable continuing to overpay? This is a little bit of the reality check here, right? And if you're willing to do something about it, then great. We'd love to help you in that journey. If you're not, well, then guess what? Kevin O'Leary, my bald brother, is here to tell you, hey, shame on you if you don't plan for taxes. And I know nobody in this day and age in our culture likes the shame word. Kevin's a straight shooter. He's not going to pull any punches. I'm not going to shame you. I might, with some compassion, give you a hug or a fist bump or a handshake and say, hey, I'm sorry you're not taking this seriously, but there's substantial savings on deck for you. And I would actually maybe ask it this way. If you look at your expenses right now, let's just pretend that we pull up on the screen here your P&L, your profit and loss. And on the right, on this side, we've got all of your inbound revenues, all of your profits, money that's flowing in your door. And then on the right-hand side, we've got all of your losses, everything that's an expense to you. What do you think is your business's biggest expense? Is it your payroll? Is it your cost of goods? Is it your debt and interest payments? Is it, I don't know, your rent and other, your landlord is just raking you for the over the coals, right? I don't know what might be happening. Or is it your taxes? And odds are you've looked at that taxes line item. You've kind of always thought, well, there's nothing I can really do about that. Well, in everything that I just outlined, actually, the one that you can have the fastest impact on and with is your taxes. Like, you're not going to go renegotiate with all your employees on payroll. You're not going to go to your landlord and renegotiate your lease. You're probably not going to go to the bank with interest rates today and negotiate a cheaper debt payment, right? The fast track for you to manage and increase your net profits and to increase your profitability is to do something about your taxes. And let's just look at the flip side of the coin. What is the cost of doing nothing? Like, if I don't interact with TaxHive, how much is it really going to cost me? And you might wonder, how in the world does TaxHive know the answer to that question? Everyone's scenario is a little bit different, but check this out. This right here is an example across thousands and thousands of tax plans that we've delivered to business owners. And we simply said, hey, how much revenue flows through your operation? Okay, great. We took that number, and then we did our forensics and our analysis, and we delivered a tax plan to them. And when we delivered the tax plan, we married the number, right, that was identified in their potential savings back to their gross revenues. And so when you look at this, put your eyes near the bottom where it says business revenue. I want you to scan across that line item and stop wherever your business gross revenue, annual gross revenue stops. And then see the money up above, right? This is on average what we're identifying for savings for a business owner when they work with us. And you might say, oh, Devin, I'm in that lower, I'm just doing my first 100 grand. This is not significant money to me. Like, it doesn't really matter. And I would 15%, like, that's the 15 grand, right, that we were talking about at the start of this call. I would argue that 15 grand probably matters more to that startup than even the couple $100,000. I've seen tax plans in the $300,000+ range annually that is on the table for a business owner to capture. I would argue that the 15,000 is probably just as significant, if not way more significant, to that lower end person than it is to the multi-million-dollar business. But nonetheless, these numbers oftentimes are the difference between making payroll or not, staying in business or not, adding another location or not, diversifying your investment portfolio. All kinds of other opportunities exist when you unlock all of these dollars from your business within the tax code. And let's just be frank about this, because this is how most people view it, is that Uncle Sam is pointing the finger at you and staring, down your numbers and your bank account and trying to capture every last dollar that you make, where actually the tax code was written in our favor as business owners. Like, the tax code exists to incentivize certain behaviors. They want us to be business owners. They want us to risk our capital. They want us to employ other people to infuse and generate opportunities within our economy. And the trade-off, the fair exchange of value from the government, is that if you're one of those people, then here are all of the tax credits, gaps, deductions, dynasty strategies that you are eligible for as a taxpayer and as a business owner in this country. You might deem it as unfair. Our culture right now wants to disparage and almost criminalize people that take advantage of the tax code. But this is the bargain that the government made, because they know as business owners, we're responsible for 2/3 of the jobs that are created in our country. They're attributed to small business. Over 40% of the economic activity that happens in our country due to small business owners. And so it makes sense that the tax code is written for you and to your benefit. But there's a difference between you being a business owner and taking advantage of the code versus being a business owner, being blind to that fact and just assuming that your tax preparer is doing everything that they should. So here's what I want to also be clear on. The IRS is just the world's largest debt collection agency, but guess what? They don't want even a minute or a dollar more of what you owe than what you really owe. Like, if let's just pretend for a second, right here is the tax code. Like, this hand is the tax code. This is what you actually owe. And then over here on the right-hand side is where your current accountant is filing your taxes. And everything in between are the deductions and credits that you're missing out on. And your current accountant says, oh, yeah. I mean, like, we don't want to mess with that. That's some high risk stuff, right? Like, that's a something that just might be a red flag strategy. I don't know if you want to mess with that. Well, convenient for your taxpayer. I mean for your tax preparer, it's not their money. Like, this is the code. This is everything that's legal and, ethical and moral. It's in the code. It's there for you. And right over here is what you're currently filing at. And in between is all of your money. Convenient for them to not care because it's not their bank account. It's not their money. The only person that can and should care about it is you. You're the only person that can really do something about it. And I like this question. When do you want to pay taxes? I mean, like, you have three options, actually. You could pay now, you could pay later, you can pay never. If I were to put a poll up right now, I'll bet everyone silently would say, I want to pay taxes never. I'm just not willing to say it out loud because you're maybe afraid that some auditor or whoever is spying and check, maybe they're on this webinar right now and you're like, I don't want to get in any trouble. So I'll pick the middle one and we'll go with later because now sounds horrible. Well, now is what happens as a W-2 employee. In fact, the government gets paid before the money ever hits your account, right? They strip it out of your check. The way that you pay later is on quarterly returns and that kind of, estimated returns. But the way you pay never sounds a little bit sketchy. Like, it maybe sounds like the handcuffs strategy. Like, hey, Devin, are we talking about Wesley Snipes and Al Capone here? No. The way you pay never, two options, and I discovered the second one. I always thought in my head, well, yeah, you pay never with deductions. And then somebody in one of my groups that I was teaching one time shouted out, like, hey, just don't make any money. Okay, that is option number two. If you don't make any money, you'll never pay tax. That's just a horrible goal, right? None of us are shooting for that. How much money do you want to make? All of it. And when you make all of it, right, you're going to have some version of a tax, but it's negotiable. We can do something about it. The code is written in your favor, and we can minimize that tax burden. And in fact, let's just pretend for a second that $5 flows into your business. I know it's much more than this, but just for sake of example, if $5 flows into your business, how do you pay never on that $5? You do it with what I already showed you, which is the pillars: deductions, credits, gaps, and dynasty strategies. And again, I need to drive this home. What we're about to talk about has nothing to do with tax preparation. Preparers and filers check boxes. This is the difference between baseball and cricket, or the difference between tennis and pickleball. It's the difference between the cashier at the grocery store and, your coupon lady following you around the store to ensure that you capture every single coupon and benefit and discount that's available to you. And so let's be clear about who TaxHive is. We're an advisory firm. Kevin O'Leary is one of our equity partners. We specialize in tax compliance and tax strategy. We also do tax preparation and bookkeeping, but those are secondary. I mean, you can open if the yellow pages still existed, you could open the yellow pages or Google Maps, right, and find thousands of people that'll prepare your taxes. That's not hard to do. Finding someone who understands the code, who can take a look at your personal scenario and say, hey, here's where you do business. Here's the type of revenue that's flowing into your operation. Here's your corporate structure. Here's everything about your business that aligns with the tax code, and discover all of the opportunities for you, uncover them. This a little bit, bear with me on this story. I hate the dentist. Hate's a strong word. I really dislike the dentist. We don't allow the hate word in my home with my 4 kids, so I won't use it here. I really don't like the dentist. My father-in-law is a dentist, and it just is uncomfortable to go there. But when I went there last, right, these pearly whites, they got cleaned and they got polished. Well, that's the hygienist that does that. That's a little bit like your tax preparer. They have some specialty, but they're really just doing some basic fundamental work, right? But then in strolls on a nice padded chair the dentist, and she starts to get her fine, tools, and she's picking and prodding, taking x-rays. They're doing all of the forensics and the analysis. And what are they in search of? The dentist is in search of a cavity, a hole, an opportunity, a gap, somewhere that you as a business owner are overpaying on taxes. So to drive this home a little bit more clearly, TaxHive would be your dentist. Your current tax preparer would be your hygienist, right? And that's the difference. We're talking about two completely different disciplines. And I just sometimes can't drive that home enough. When you work with TaxHive, beyond Kevin O'Leary, and the name recognition that comes with Mr. Wonderful, we're a highly rated, A+ rating, 700+ Trust Pilot reviews, 4.6 out of 5 on Google, thousands and thousands of people that have left us, reviews in multiple places. The only reason I show you this is that I think social proof matters, and what our customers are saying about us matters. And obviously, we're not perfect. There's a gap, right? I mean, it's not a perfect 5 out of 5. And how is that possible? Well, we're a business of people, so we're not perfect. You as a business owner probably also realize, unfortunately, there are just some people in this world that are unappeasable, right? You can't make them happy no matter what you gave them or offered them. And so anyway, I show you this to just say, we're knocking it out of the park. You're working with someone, or potentially working with someone, that's going to do the same thing for you. And I would just add, anywhere that we've gotten a low rating from someone, that's okay. We treat those like opportunities to over deliver for the client and make it up to them in a massive way. So how do we maximize deductions? Like, what does this look like? If there are over 1,400 of them, how in the world are you going to identify the ones that apply to you and your geography and your corporate structure and your industry, right? Your revenue type? Well, you don't have to. If you partner with TaxHive, right, we do all that heavy lifting for you. Let me give you a few examples. So right here, this is Carrie, a notary business, $28,000 of potential savings in her tax plan. Over the next 5 years, that's $140,000 of extra dollars that potentially are sitting in her bank account that she otherwise wouldn't have. And I'm not even highlighting the most, I think, important part of this slide. Do you see it yet? Look closely. Look a little more closely. Do you see it yet? 20 years in business. 20 years, you guys. 20. How much money was left on the table? In fact, it's not sitting on the table anymore. How much money was unnecessarily donated to the IRS because Carrie wasn't working with a tax strategist? Carrie was working with a tax preparer, right? And in Carrie's tax plan, like, pretty basic, simple stuff. I mean, she had the S Corp election, was one of her favorite strategies, a number of other deductions. And when I mention this S Corp election, I usually get to this when we talk about tax gaps. The S Corp election, if you're doing 50 to 100 grand or more, and you have, an LLC, well, you should consider taking the election that's called an S Corp election. It avoids double taxation. It avoids self-employment tax. There's all kinds of benefits to the S Corp election. In fact, almost half of Carrie's money in this tax plan was simply tied to that one individual strategy. Really, really significant stuff. Now, let's look at another example here. This is Astrid, commercial cleaning business out of Missouri. You might laugh this away and think, oh, $9,500, big deal. Well, $9,500 matters to Astrid. I mean, it's going to make a difference for her business. And also included about $6,000 in the S Corp election. There was also a self-directed retirement account strategy alongside a couple of other deductions. I want to be clear here. The deductions in a lot of cases are very basic and simple in nature. It's just a matter of documenting them. There are also other deductions that you are totally unaware of and really hard to discover whether or not they apply to you and your situation. Our tax plans do this in very basic nature. We say, hey, let us take a look at your last year's tax return. When we take a look at it, we're going to know exactly what you did or didn't do. And everything that we would deliver to you in a tax plan is going to be new stuff that you're not already doing. So it's in addition to, right? Let's talk about these strategic credits, because credits were kind of off the map for a while until COVID came around. And then COVID put them back on the map. You might say, okay, how was that the case, Devin? Well, during COVID, if you recall, there's what's called the employee retention credit, the ERC credit, right? And the ERC credit said, hey, we're so desperate as a government to keep money flowing into people's bank accounts. Like, don't fire your people. If you'll just, as a business owner, subsidize the wages of your employees, even though they're working from home or maybe they're not working, if you'll just pay those wages, guess what? We'll give you a credit equal to the government subsidized wages via the ERC credit. That's not the only credit in the code. In fact, let me show you a few. Sean's Tree Service out of Florida had the work opportunity tax credit. What does that mean? It means that the government would actually pay some of the wages for people that he hired based on geography, maybe demographic, or some other outlier scenario that gave Sean the opportunity to employ someone and either not pay them because the government would pay their wage, or pay less, meaning money out of his account that went to paying them. They still got what they were due and owed, right? But the government subsidized it via the work opportunity tax credit. In Virginia, Matt and his information technology business had the vehicle plug-in tax credit. Let's talk about solar for a quick second. You already know, hey, if I go solar on my home, I've got ITC tax credits, potentially depreciation schedules, and all kinds of other tax benefits surrounding solar. But it's not just solar panels. It's also EV chargers. There's also battery backup incentives, both on the federal level and on the state level. The solar credits are massive right now. They apply both to individuals on a personal level, like on your primary residence, as well as to your business. So you got to be paying attention to those. Now, another one, R&D tax credit, research and development. Hold on a second, Devin. So if I'm in a particular industry doing some innovation and doing some research and developing new products, the government will offset my expense to do that. Like they might actually pay for some of the equipment. They might also pay for some of the wages of the employees that are participating in that R&D. Yes. So the R&D tax credit, a little bit specialized, but nonetheless applicable. Elias and his semiconductor and energy business in California had this in their tax plan. Now, whenever I show things like that, people are always like, oh yeah, the whole solar thing, the R&D tax credit, that's Elon Musk, that's SpaceX, that's Tesla. Hold on, like time out for a second. None of these gentlemen or ladies that you see that are multi-million billionaires, right? None of them are listed by name in the tax code. Like they're just simply taxpayers that own businesses in America. They might have a team of strategists and lawyers that are helping them take advantage of it. But that's what we do here at TaxHive. We take the high-level tax strategy and expertise that normally is reserved for the Fortune 500s and the big corporations, and we say, hey, why don't we deliver this to the small business owner, do it for them at scale and at a price that's extremely reasonable. That is what we do. And I just want to make sure you all recognize, while you may not like the tax brackets of the people that are on the screen right now, they're no different than you and I. They have the exact same code that they're abiding by. Which brings me to this next point, which is tax gaps. Oftentimes people confuse this with loopholes. Loopholes is like this code word for something mischievous and illegal. No, tax gaps are not red flag strategies. They're not audit triggering strategies. They are legal. They have legal precedent, and we put you in a defensible position when we implement them, when we identify them in your tax plan. Here's out of Kentucky, Alva, real estate broker, over 26 grand. I'm trying to show you some examples that are not like hyperinflated. I mean, we have examples that far exceed 300 grand in tax savings. I'm just trying to give you some run of the mill ones right here. So we've got Kentucky real estate broker, 26 grand. In Alva's tax plan, it included Rule 280A, which is also known as the Augusta Rule. I'm going to teach that one to you here in just a second. It also included bonus depreciation and a myriad of other things. And so here's another deal. Tam Lynn out of Texas, massage therapy business, 16 grand in savings. It included the S-Corp election, the Augusta Rule, some other bonus depreciation and retirement strategies and other deductions, 16 grand. I'm going to get to dynasty strategies. Before I do that, I've got to teach you Rule 280A. Rule 280A is something that you're going to find on Reddit. You'll find it on X. You'll find it on YouTube. And then you'll never go and do it because you don't have the confidence of doing it on your own, worried that you're going to do it the wrong way and trigger an audit. Rule 280A simply says you can rent your home out to your business up to 14 times a year and do it tax-free. Whoa, what did I just hear? I can rent my home out to my business for a business purpose 14 times a year, and I can do it tax-free. What does that mean? Well, the expense to your business is the equivalent of an expense like renting a ballroom or a banquet room from a Marriott or a Hilton, but you're doing it from yourself, from your personal residence. And you can do it 14 times a year. And yes, it's deductible as an expense to your business, and the income to you on a personal level is tax free. You heard that correctly, tax free. It's commonly known as the Augusta Rule. You can go look that up later. It's a little bit of folklore centered around the masters and how a bunch of people that live in Augusta, Georgia, called lobbyists and wanted to not pay tax on the money and the revenue that they made when the masters came to town. Whether that's true or not doesn't really matter. But the Augusta Rule, Rule 280A, is applicable to everyone. You have to actually host a meeting. It's for a business purpose, but nonetheless applicable. You're going to find that in a lot of tax plans. It's super advantageous. For those of you that joined a little bit late, the dynasty strategies, solo 401ks, other retirement accounts, you've got captive insurance, cost segregation, oil and gas, mineral deposits, all kinds of other advanced strategies. And the one that I shared earlier is this accelerated donation strategy, where instead of donating or paying 100 grand to the IRS, we paid 20,000 to the IRS. We paid 50,000, or rather donated 50,000 to a nonprofit. We got an accelerator on our donation that resulted in a $30,000 tax savings, $30,000 in your bank account. So I'm going to skip past these. These are some other folks that did reallocated investment strategies, conservation easements, and other Augusta Rule type strategies. Oil and gas was one of these for this moving company. A lot of stuff in the tax code for you to take advantage of. As we wrap up here, Shane, I know you're on the call. I believe that your tax plan identified a pretty big chunk of potential savings. Do you mind just sharing briefly, 30, 40 seconds on what your experience was like and what you feel like your tax plan has unlocked for you as people are considering, taking us up on the call here?
Yeah, absolutely, Devin. Thanks for having me on too. I tell you, you guys have completely changed my money strategy. Just last year for 2023, I had just started a side hustle with Turo. I ran 2 cars. And after doing that and getting together with your team, I found write-offs that were nearly 88 grand that I was able to use to offset the income I made, and then also take off a huge amount towards my W-2 from last year. And I did the math on that because I am also a numbers guy and found out that I actually only paid taxes for 3 months out of the year. And the other 9 months was money back in my pocket.
Wow. That's, yeah. And I think, the average American, they say what works about 9 or 7 or 8. I can't remember what the number was, but it was substantial. It was about 2/3 of the year, at least, on, working basically for the government before they actually keep any of their own money. So I appreciate you sharing that, Shane. I know that's a big reason that, you're putting us in front of your audience and your clientele here, and we just greatly appreciate it. I'm going to make kind of a final invitation, and then we're done here, which is, hey, you work so hard to grow your business. Kevin O'Leary would tell you, don't overpay on taxes. It is absolutely unnecessary. It's avoidable. It's negotiable. And it's not something we evade. It's something that we do legally, right, with the code. And the final question for everyone on the call is just, hey, are you similar to Shane? Are you willing to have a call with us and just see if we're the right fit for your scenario? If that's the kind of person you are, if you're wanting to do something about your scenario and at least explore it with an open dialogue, then great. Let's book a call. Let's have a free strategy session. It's a discovery call. Go to taxhive.com/Shane or scan the QR code. We would be honored to talk with you and have a couple of minutes to potentially earn your business, see if there's a fit, see if there's something we can do for you. And if not, then no harm, no foul. I will take a little bit of steam out of our team's conversation with you. When you work with us, we make guarantees that say, hey, we're going to identify at least double or triple the cost of your tax plan, or we'll give you your money back. So it's really a low risk, opportunity for you. I'd highly recommend it. And Shane, just thanks again for having us. I don't know if there's any other questions or things that I missed that you maybe want me to address for your group, but man, just thank you so much for giving us this opportunity. It's the end of 2024, clock's ticking. Get yourself on the right path and track for not only the end of this year, but going into 2025. It should hopefully be the biggest year for everyone.
Yeah, I appreciate it, Devin. I know with the guys that I have, family, friends, and also on my channel, a lot of them are just small business people. So, with what you are going over, it's going to make a huge difference. And the coolest part, it's it costs you nothing to at least ask. And
Yeah.
that's the one thing I learned, if you don't ask, you don't get. And, free is sometimes misleading because you see free and then you think like your brain goes down all these different
Yeah.
rabbit holes and stuff. But I took up, just found this on another channel a couple years ago, made the call. You guys, again, completely changed my money and how it works for me when it comes to how much I get to keep.
Yeah.
Um, and that alone's huge. And I know, I guess if you could touch base on, I mean, just basic resellers. Like I have this awesome young guy that I worked with, and he sells shoes on the side, resells them.
Yep.
What's like some basic stuff that you know you could just tip them off to say, hey man, just try these two or three things. I'm missing a few. Just give us a call. That might help someone in that position.
Yeah, totally. I'd first look at their corporate structure, making sure that they've taken the S Corp election. A C Corp election is super rare. In most cases, an S Corp election is definitely going to be a fit there. I'd also recommend Rule 280A. If they have employees or people that they meet with, they could bring into their, into their place, do a little client meeting or a corporate meeting with their people and do some training. You can do that up to 14 times a year. Charge a reasonable rate. You go to peerspace.com to figure out that reasonable rate. That's PEER space.com. And then I would just look at a myriad of deductions, whether it's the home office deduction, your mileage on your vehicle, obviously some of your other improvements and cost of goods. There's all kinds of other expenses that are deductible that you just need to make sure that you're tracking and paying attention to. And we'd be able to uncover, I think, most of that for these folks. And then the things that we surprise them with typically are in the credits, gaps, and dynasty strategies. So we look forward to that conversation with everyone. We appreciate you being on. Shane, hopefully this has been time well spent for your community, and we greatly appreciate the opportunity to be here, and we wish everyone the best of success going into 2025.
Thank you very much. I very much appreciate it. Thanks, Devin.
You bet. God bless everyone out there. We'll be in touch and look forward to the call. We'll see you.
Have a good holiday.
Thanks, Shane. You as well, brother.